What's up, everybody? Alexander, the day trading champ, and today I have the highly requested, largely anticipated, and long-awaited video on how to get better entries and exits, which will in return make you a better and more profitable trader. Now guys, I don't promise you that by the end of this video you're all of a sudden going to be an overnight sensation, but I do promise you that if you stick around the whole video, you're going to pick up on a couple tricks, tips that I use myself when I'm trading, and you're going to be able to take advantage and get a little better. Now, before we get into any charts and examples, I want to first point out that entries and exits are extremely hard, and no matter how good you are, it's kind of impossible to really get every single one right unless you only take, these 100%, A+ setups, and maybe you trade like once a week and you wait for that one opportunity. But otherwise, if you're taking multiple trades, forget it. You're not going to get perfect entry and exit every time, but there are things we can do to, maximize our profits and make them better. So I'm going to be going over that, and the first example I want to get into is FedEx. Alright, this is one of our earnings plays we nailed last week, and like we always say, right, after earnings plays, stocks don't just drop one day. We've noticed this season, right? We've noticed that stocks that excel in these market conditions and have actually soared these last 5 months, they're actually dropping multiple days after earnings. So the first thing I can tell you when it comes to entries and exits is a lot about confidence, okay? Are you like truly calculated in your own decision? And do you really think it's going to happen, right? Because if you have true confidence, right, and you shorted it on this day, right, as soon as it bounces, like we always talk, short the bounce. If you shorted this bounce and you stuck with those contracts, right, all the way down to here, okay, that's going to be the most profitable trade you could take. Now, this is one of the things I want to get into, right? There's multiple strategies that go into the entries and exits. So one of the strategies can be is you sell half of your positions, okay? This is going to make sure that if the trade does go against you, you did lock in some profits that are going to make sure that you don't go red on the day if the thing reverses on you and you start losing money on it, right? Because whatever you're going to be losing after, if this trade were to reverse on you, it's going to be covered by the profits you did lock in. So the first thing you need to have in your trades is confidence. But the first tip I can give you when you're actually in the trade is actually locking in some profits whenever you're making some money on it. Alright, so that's a big part of, confidence. The reason why we have confidence issues in our trades, right, is because we don't want to lose money. That's the big fear is, oh my god, I don't want to lose $100, $200, right? Depending on your account size, you're like, I don't want to lose any money on this trade. So that's going to put fear into you and make you, go against your trade if it starts going against you. And that's a huge problem with your entries and exits, because if you target an entry here and you plan to exit here, anything that bounces in between should not matter if you're calculated and you know what you're doing and you truly believe in the process and what you calculated in advance, okay? So that's why I pointed out that once you lock in some profits, you're going to kind of put away that fear of losing money, because now you're going to have these profits that are going to cover you if the trade goes against you. So I think a lot of it, first off, has to do with being calculated and confident. And second, you can't be shaken out too easily, right? And you can do this by mitigating the fear of losing money by actually securing some profits as soon as the trade does go in your way. On a nice little drop like we would have got here on FedEx. You secure some profits and hold the rest, even though it's a rocky road, right? And you're losing money for the day, but then you gap down, right? Bouncy, 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 and you gap down. All right, so that's what I'm saying. Like a specific play like this, you're gonna want to stay confident and true to your calculations, and that's gonna help a lot for sure. Also, I wanted to clarify about what I just said. You're losing money by waiting on them. What I mean is not that you're really actually losing money, but more that your contracts are losing value, okay, due to theta, time decay on those contract options, okay? So that's what I mean. Like the longer you wait, the more your contracts are losing value, but ultimately the trade is still profitable is what I mean. You're just going to have to wait on it even though you are losing value due to theta, all right? So that's kind of more of a psychology aspect. Now I'm going to give you some actual, time, numbers, and what I find to be a very good timing point for reversals. Alright guys, so we just went over the psychology, but now I want to actually give you a specific number, kind of, it's not a statistically proven fact or anything, but it's something I found with my trading and very common with a lot of stocks is it's around 10:15. I find that a lot of reversals take place. So you look at this chart, right? Look down here. It's 9 o'clock on my chart. That's Central Time, so that's 10 o'clock, alright? So the magic number is 10:15, but give or take 15-20 minutes, very close to around 10:15, you get a lot of reversals. So in this case, it was 15 minutes early, right? But how would you know that the reversal was going to take place earlier instead of waiting till 10:15, right? Well, you would know this. Why? Because you're getting around that exact point at where the stock opened at, right? The stock opened right here, and this is around the same point that it's looking to form all these topping candles that's showing major weakness in the stock. So that's how you know, I always keep that 10:15 time in my mind, and if I see I'm getting close to that 10:15, on top of that, I'm getting all these topping wicks, I'm getting, to the point of where we opened at, that will give me a lot more confidence to getting into that trade, okay? So, that's, my one little stat. I guess it's not really a stat, but one time frame to keep in mind when trading and timing your entries and exits is look for weakness around that 10:15 time period. If you're a day trader, right, you're trading in the mornings. And yeah, with that being said, let's get into the next earnings play we nailed. All right, next stock to go over, Adobe. This was one of our earnings plays that we called last week as well. We said it was going to drop after earnings, and we were ready to short, but even though I was ready, I did not take the trade, and I'll explain to you right now. And this is actually the third thing you need to keep in mind when it comes to entries and exits, and it's that a lot of the times you want to calculate your move in advance. You want to set a target. You want to set an exit, right? And let me tell you what I was thinking this morning. I woke up. I see this top here, right? So when I'm ready, the market opens. I'm like, all right, sweet. I'm going to wait for a bounce up to this level. We're going to double top, and I'm going to short it, okay? But that never happened, okay? And when I set the requirements on myself, I stayed with him, and I did not take the trade no matter how much I was kicking myself in the butt thinking, damn, I missed out on the opportunity here. I mean, I got the play right? I knew the stock was going to drop after earnings. I just couldn't get the right entry, and that's where you got to be disciplined and just say, hey, I didn't time it right. It's okay. So not everything's going to go to plan, but the best thing to do is not try to enter in late. Don't chase the trade. Let the trade come to you, and you're gonna have a way better win rate like that. Trust me, I've learned the hard way. I've been through it myself, and I'm sure a lot of you have too. Don't chase the trade. Let it come to you. And going with that second point we had about the 10:15 time frame, look at it here. Right around 10:05, you can see here. So very close to that 10:15 time frame, right? So we get a little bounce at around 10:15, right? It's really 10:05 when you get all these topping candles, okay? So that's how you could know, like, hey, I missed out on this first drop, but now we're bouncing a little. Let me get back in here. It's around that 10:15 time frame, and we're getting all these topping candles, okay? So that could have been a good time to re-enter, So this just goes to show you can be a really good trader but still miss out on an entry or an exit. The point is to not get emotional and then try to jump in once it's already taken place. By the time something's taken place, it's too late already, alright? So you do need to be able to adapt on the fly, and by the time you realize it's dropping like a rock, like when things are dropping, you don't want to get in, okay? It's just too expensive, the contracts, when things are dropping quickly like that. And guys, and last thing I wanted to point out on this Adobe trade is that you see where we closed the day before earnings. Okay, so a risk management strategy you would implement here is selling some of your positions, maybe a quarter, as you reach this level, right? Because what if it did reverse back up at this level? Okay, so whenever you're approaching levels that are important, you want to take some profits, possibly, just depending on what kind of trader you are, right? If you're willing to risk it out and ride it out, then I guess you don't have to. But if you do have that fear, right, of like we went over in the first point of the video, of fear of losing money, then if you want to get that out of the way, just secure some profits so you lose that fear, and that way you can trade with less emotion, which overall makes you a lot better. Alright guys, key takeaways I want you to get out of this video. Take a picture of it here, alright? This just kind of bothers me. I feel like it's a little messy. It doesn't look very good, so I'm going to go through them all individually and just recap them real briefly. But take a picture of this. Why? Well, because where else on YouTube are you going to find someone actually giving you exactly what you need so that you leave a video better than when you started it, because a lot of videos, you start them, they go over a few points, but they don't really summarize it well, so you actually know what to improve on by the time you're done with it. So I put it together here for you so you can actually look at this, especially like when you're trading. This will help you. I know it looks like a lot of words, but it really is going to help you if you really do give it some time and put your effort into it. All right. So with that being said, the first point is, if you are scared of losing money, then secure some profits once the trade is going away. This is going to make sure that you have some profits locked in, so that way once you are losing money, you're not really losing money, okay? Because a lot of times you have, especially people with smaller accounts, right? They're scared to lose any money because they don't have that much money in the account in the first place, right? Whereas someone who's already built up their account to a larger amount, they know it's part of the game. They're measuring everything in percentages, like, okay, I lost 5%, 10% here. I know that's a lot of money, but at the same time, he's calculated, so it's not going to bother him as much as someone, who might have a smaller account. And I'm not saying it doesn't bother people with larger accounts, but I'm just saying that, if you're scared of losing a certain amount of money, like, just make sure you secure some profits once that trade's going your way. All right. Second point is a very good one. I don't see anyone really talking about it much, but use 10-15 as a reference point. Okay. You can go look at charts yourself and just see. A lot of times I do notice around 10-15, around that time, we do get a lot of reversals, especially like, you use it in combination with your other factors you use to identify reversals, right? Like topping candles, levels, and all these other things, right? So just use that as a time frame, especially like I know we're all trading early in the morning around this time, right? So you might as well use that time frame and keep it, in the back of your mind. And third, measure in percent gain, not P&L, right? A lot of times you're thinking you're going with a trade, and instead of going with what you calculated, like we're going to drop down to here, you'll see and you'll be like, oh my god, if we keep dropping, I'm going to make $20,000 today. That's not a good way to go about it. You want to measure in percent gain, not P&L. It's going to help you a lot. Trust me, I've had a couple mistakes with this. This has really sucked and kicked my ass before. All right. And the next point, fourth point, look for weakness at the levels you calculate in advance. So I'd recommend drawing up your levels before the day starts, and then whenever you're taking that trade, as you're approaching those levels and you see weakness, say if you're shorting, right, you see weakness approaching a topping level, that's when it will help you short it there. That's a good entry, right? Whereas, if you're trying to buy calls, then once you're getting to a bottom level, if you're starting to show, volume is starting to die out and it looks like buyers about to come in, then that's going to be a better time to get in on calls. But you're not going to want to get in on calls when everything's already going up, okay? So wait to hit the levels that you calculated in advance. And then sixth point, I believe, better to not trade than try and jump in late. When things are already happening, it's easy to be like, damn, I missed out, I need to get in, but it's just not the case. Just stay out and just wait for the next opportunity. If you actually counted how many opportunities you get in a year, it's so many, okay? So just wait till the next day. There's going to be another great opportunity, especially if you're subscribed and following the channel, then you know that's true. Like, we're giving you guys good trading ideas every week, all over the place. So, guys, those are the best tips and tricks I could give you for better entries and exits. I hope you found this video useful. Make sure you drop a like if you liked it, and subscribe to the channel if you're not. Why? Because you're missing out on tons of valuable information like this that other people are not willing to give you. Okay, so with that being said, I'm Alexander, the day trading champ, and before I forget, actually, we do have a Reddit community I just made. It's going to be day trading options. You can join it. I'm going to put a link to it in the description, so make sure you go in there. Maybe we can start going over some trading ideas and we'll be able to interact better there. So make sure you share the video with a friend. Like I said, subscribe, like the video if you enjoyed it all, and I will see you guys in the next video.